Welcome everybody to another Profiteer Trading video. Take a second to read the risk disclaimer here. Trading futures and options on futures involves substantial risk of loss and it's not suitable for all investors. Opinions, market data, and recommendations from myself are not a direct financial assessment or advice to you. Do not take them as such. They are simply for educational purposes only. So any past performance is not indicative of future results. So please remember that this is simply a hypothetical trading basis. So let's get started here on the crude oil. You can see that we have a short here at 54.89s. That was a short that we took just before the report to break the initial shelf. So the breakout trade to the short side was the idea based on the bearish activity that we saw into the day. Now, the only thing that would make us not only get out of the trade, but flip sides entirely, because you can see we're short 5 lots, would be a snap back against the 89 line in the sand, which is defined at 91s. So this inflection zone would either have to break and accelerate for us to stay in the trade, or have a failure to break below and have buyers step in. And you can see that they're basically sitting here at this volume node at 54.92s. So we flatten out, we've broken above the inflection, we recheck inventory, and now just before the report, we have enough conviction to believe that there's going to be a massive move to the upside based on that short covering rally that would occur on a positive report. So we're going to target 72s just as a mental note for the day. So let's give it a second here. There it goes. There's a report, and you can see we get filled up at the 24s. And now we're going to wait and we're going to perform, meaning that we're going to figure out how this thing is developing in the near-term volatility performance. And when I say performance, I mean the ability to extrapolate quickly and read quickly, intuitively. So we're long 27s now. We're looking to head across 33s. We're having rejection there, rejection. Can't seem to break, and then boom, snap straight away back against 44s. We're looking to see another accelerated move. We're having trouble getting it, so now we have to think fast and say, okay, we want to get out of this trade, and we're going to short it back down to a better value area. We're going to wait for an acceleration below 24s. Pressing lower, 17s get retested. If we can't break above 17s, then we'd be looking to short down to 55.04s. The fact that we're holding 17s, I have to think fast enough to just say, forget it, I'm getting back in 5 lots. I want 21s through 17s as an entry, and I'm looking for a retest of 25 and 44s. So we're developing on a quick basis here. 19s, 21s, 19s, 21s. We're trading 22s now 25s, tick up 28s straight away. So this is fast-paced volatility performance, extrapolating profits at a high-frequency basis. So now we're waiting for 33s, looking for an acceleration above. And you can see that price is starting to exhaust a bit. It's exhausting at the 24s, but holding as support. So that's the key inflection there. We're watching 17s carefully, making sure that there's not inventory appearing there because there's plenty above. You can see my mouse is trying to figure out really just how to deal with this inflection zone because we're kind of in a tight double distribution here. So we need to make up our mind very quickly. So now we're finally developing. You can see that we are kind of creating this sort of node in this small zone at the 30 level, retesting 30s, straight away back to 24s. So now we're just bouncing, and then bam, retest of 33s with acceleration. And here, I'll fast forward for you guys so you can, let me give it a second here, because look, watch the mouse. I'm so focused on that 24 through 30s, and then 21s has to hold. Just kind of trying to be patient. And there it goes. Straight away back to 33s. Now we're going to stay in the trade for a second and look for the retest of 33s through 40s. Got to break through 36. Here, let's make this easier for you guys to see. So you can see we're heading into that node at 5560s here. We've got 8 lots now. We've sized into this trade because we've broken well above 33s. So what I'm looking for now is I'm just looking to hedge some profits in here. I want 40s now. There's my 40s. Now I'm hedging just above 33s. Or below, I'm sorry. Now we're above. There we go. So now we want to get filled just above in case, you know, thing pulls back. We get filled again. We can't really break below 29s for me to be too convinced on this trade. I'll fast forward for you guys to keep it short and sweet. You can see we're retesting, and now we get stopped out of the trade fully. That doesn't mean we're done. As long as we hold 24s, we're still willing to get back in, but it would have been a break of the plan for that current trade, so we have to treat it separately. So we're okay to get long on a trigger at 04s or an aggressive counter trend short here at 18s, which you can see happens. But the key here now is that 24s is now the new snapback and release, meaning that if we snap back into 24s and release above, then I got to get long again. So I'm short 5 lots 18, and I'm setting 10 lots at 24 because if I get filled at 24, then I want to be 5 lots long, right? Get rid of my 5 lots short, but buy to cover on a loss, and then take 5 lots long immediately on a cut in reverse. Snap back into 18s, looking for the distribution. Fast forward for you guys. You can see that we are really just distributing for like a couple minutes. And then here, let me rewind this a little bit. So right there is when we flatten out and take the 5 lots back up. So we're not able to break 18s. So I change my trigger again, and I say, forget it, we're headed back up. I'm long 20s. And now I'm going to sit back and relax because now after retesting 18 so many times, there's absolutely no reason in my technical landscape why we should have to retest lower. So let me fast forward. You can see that there you have first a break of 29s. Now we head to 30s. Straight away back against 33s. Fast forward a little bit here because this is a long video, guys. And you can see we've got a limit at 18. This is an important point because I want you guys to understand the difference between scalping and scaling. So scaling is when you know a trend like continuation is occurring and you don't care, you know, the micro pullbacks. You want to get long at those micro pullbacks separately based on each position. So 55.18s is a key place for me to get long, even though I'm long 25 already because they're separate positions. Okay, so there I get filled at 18s. I have 6 lots now, or about 4, I believe. And there we go, straight away back to 33s. We're developing that liquidity, and there we go. We explode back up to 50s. And you guys kind of get the idea here. This is just volatility performance trading on a high-frequency basis, knowing trend-like versus liquidation-like moves, and knowing where the levels live. And the levels in this trade were 36, 44s, and 50s, back up to 56 as the initial resistance. And that's initially where we took it to. You can see there's 56, and that's where we initially started taking some size off. You can see that here, a couple limits here, kind of acting as our points of hedge. And sorry, guys, I just want to fast forward because I know it's a lot. The point is, though, after you saw that initial move at the report, that, you know, once you get through all the noise, that you'll be able to kind of identify direction. Okay? All right, guys, I hope that was helpful to you, and we'll catch you guys tomorrow. All right? Take it easy, and we'll see you guys again soon.